There's the first tick on the index. As we said, absolutely flat. Little bit of a negative bias now clocking in for the Nifty.
The Nifty has given up a bit after rallying hard yesterday, currently down 30 points. Midcap Index has come off from the day's high. The Nifty, in fact, went above the 19,400 and now is just slightly below that level. But it's been a day of consolidation. Going home above the 19,400 mark, a slim gain of about 0.8%. But we spent a greater part of the trading session actually below the flat line. In fact, there was a very sharp dip somewhere around 11:45.
Well, it was an interesting day of trade and a day of resilience where we saw the markets meander lower, but from lower levels we saw it move higher once again to end at the high point of trade, marginally in the green. That's where the last tick was, and the Nifty, as a result of closed adjustment, closed just below the flat line. It was the Nifty Bank which was underperforming for most part of the day, and thereafter saw a big move owing to the Nifty Financial Services expiry and ended higher. That was the story of the market, along with a lot of stocks in focus. We'll talk about that. This is Markets Today on CNBC-TV18, a show where we track all the day's trade in just 5 headlines. Let's talk about those 5 headlines then. Sensex and Nifty end marginally in the red after a range-bound session. Midcaps outperformed the blue chips, with the index gaining over 100 points. And the Nifty Bank did well too. Hindustan Petroleum Corporation reports a strong quarter on the back of higher gross refining margins, but inventory gains deliver the big surprise. The stock flares up 6%. Mama Earth parent Honasa sees a tepid start to its D-Street journey. Stock lists at less than a 2% premium on the NSE, but thereafter we saw the stock move higher and ended about 4% higher. Margin boost for pharma names. Zydus Life, Alchem Labs and Alembic Pharma beat street estimates with higher margins. Gland Pharma gains on positive brokerage commentary. Arvind Fashion and Trend fashion retailers rally almost 8 to 9% on the back of strong second quarter performance. Global sugar prices up 37% this year, hitting a 12-year high, but in India prices remain under pressure and are up only 4% for the year. Let's tell you what we have lined up for you on the show. It's a packed show. In Market Opinion, we have Rahul Arora, who's the CEO of Nirmal Bang Equities. And Big Corporate Voices, we have Varun Alagh, the CEO of Honasa Consumer, Mama Earth parent, that is. And let's talk about let's go straight to the market action then. It was, like I said, a day of recovery from the lows, tested the underlying strength of our market after seeing a big rally over the last few trading sessions. The start was on the tepid side, but the Nifty Bank led the rally in our markets in the second half. The mid-caps were doing well all through today's trading session, and we had the Nifty put its last tick in the green itself. Surabhi joins in with a wrap of the day's trading action. Surabhi.
Well, a range-bound day of trade for the market, but one that was more positive than negative. The Nifty ended absolutely flat, but mid-caps and small-caps did much better. The Midcap Index was up about 0.3%, small-cap index even better, 0.7% higher. And why do I say this day was still positive? Because the afternoon dip got bought. There was a lot of wobble in the market, particularly in the banks around 12 o'clock in the afternoon. But then the buyers came in, and the net result was the Nifty did manage a flat close. Even the Bank Nifty, that recovery was very evident on that index. The other leadership area for the market was Pharma. A lot of the large cap names like Cipla, Sun Pharma, Dr. Reddy's, all of them actually had a pretty good close by the end of it. And banks themselves, I'll just take some names here, SBI, IndusInd Bank, Axis, Kotak, most of them managed a green close for the end of the session. So where was the problem? Where was the drag on the Nifty? On the big boys, the heavyweights, so Reliance, TCS, Bharti Airtel, even L&T, ITC for that matter, all of these stocks, they were down between 0.25% to about 0.5%. So that kept a lid on the Nifty's gains. Today, the OMC space was quite interesting because of the big cool-off in oil prices that we've had internationally. HPCL also good numbers, market reacting to those numbers. So IOC, BPCL, HPCL, all these stocks were up between 5 and 6%. Speaking of numbers, a lot of solid mid-cap earnings today and the stocks were flying high. Some examples would be Jyoti Laboratories, Newland Lab, Repco and Trent delivered another sizzling show with their value brand Zudio, and the market loved every bit of that. Arvind Fashion had a good season to report as well. So some solid mid-cap earnings. Last but not the least, today's listing. So Mama Earth starts its life as a publicly traded company. Honasa Consumer was a modest beginning for this one, about 5% higher on day one. That was the market, range bound but not quite bad.
All right, it was range-bound, but not quite bad. We recovered from the lows. Let's get in some market opinion. Then Rahul Arora, the CEO at Nirmal Bang Equities, is cautious about new age companies at current valuations. He also gives out his sectoral outlook in terms of earnings performance. Let's hear him out.
Nykaa, I mean, even if it does about, say, 2.5-3 rupees earnings per share this year, it's trading at north of 50 times. That place is getting very competitive. I think competitive intensity is going to go up. I think the competition for Paytm has gone up dramatically over the last 2 or 3 years with a lot of smaller guys who've been funded that have come in. Zomato and Swiggy are an anomaly because they're just two of them. Nobody is like sort of come in and really disrupted that, whether it's a Reliance or Amazon or anything of that sort. But I think they've already been multi-baggers from the lows that they have. So I think if you're entering at this price, enter with a little bit of caution. I was very pleasantly surprised by JK Lakshmi's numbers. I think the kind of beat that we saw, both in terms of volume growth and realization growth, was very interesting. I think looking at the QSR performances, the fact that Westlife still delivered a positive same-store sales growth in a soft quarter, where Domino's delivered a -5, -6, that was very interesting. It was a very poor number from Westlife. But on a relative basis, that was probably one that stood out. And I think the auto sales numbers, I think, not so much from an earnings standpoint, but I think the auto sales numbers, barring tractors, I think M&M's tractor numbers were a bit weak, but otherwise the auto sales numbers just ahead of festive have looked pretty strong.
All right, so that is some market cue coming in. Let's talk about some more news. The second headline now, HPCL rallied near 5%, almost 6% after reporting a good set of results for the second quarter. The company's margins came in much higher than street expectations at over 8%. Net profit also beat estimates at over 5,100 crore rupees. The revenues, they were lower than street expectations, but nothing really to worry about because that is a commodity company. We focus on the gross refining margins, which were a lot better. Sonal Bhutra joins in with the key numbers. Sonal.
Well, yes, it was a good set from HPCL. It was a top-down beat. If you look at the revenues, came in at 95,700 crore rupees. EBITDA was at 8,200 crore rupees versus a poll of 6,300 crore rupees, leading to a margin of 8.6% versus a poll of 5.2%. Profits also accordingly came in higher at 5,100 crore rupees. GRMs were slightly lower than estimates, but nothing to worry about because they're still up on a quarter-on-quarter and on a YY basis. $13.3 per barrel, which is at $5 a barrel on a YY basis, $6 a barrel on a quarter-on-quarter basis. The marketing sales were also up 3.4% on a YOY basis, but declined on a sequential basis. But going forward, Jeffrey says on HPCL is that they have an underperformed rating, and EBITDA was ahead because of higher inventory gains despite weaker refining margins, but they've raised their FY24 EBITDA on a better first half FY24 results. So good numbers coming in. Outlook will also depend on how the election calendar pans out, especially on their marketing segment.
All right, Sonal, thanks a lot for that. So we'll watch out for the election calendar and its impact on these refiners. But we had a new entrant on D Street today. Mamaearth's parent Honasa saw a tepid start to its Dalal Street journey. Tepid because it listed at a less than 2% premium on the National Stock Exchange compared to all the other blockbuster listings that they've had. But it ended about 4% higher, and that is something that the street would like. The important question now is what happens post the listing. Remember, at current valuations, the stock trades at close to around 90 times 1 year forward price to earnings. So there are a few things that you need to keep an eye out on the Mamaearth business. The first one, of course, is revenue growth. The last 3 years, the company's revenues have grown at 80% versus the industry growing at 28%. Mamaearth's own CAGR has been around 62%. Importantly, the management has guided for 2 times growth over the industry over the next 5 to 7 years. The second thing you'll be watching out for post the revenue is how they leverage their ad spends. As you can see, the company's ad spends as a percentage of sales have been anywhere between 40 to 35%. As the sales increase, the street wants the ad spends as a proportion of sales to go down, and that would have a positive impact on their margins. Can the company continue to do that and surprise positively will be the big question. The third thing you have to watch out for, yes, it is gaining a lot of traction online and gets a lot of its sales online. But over the last few years, you can see its online as a proportion of sale reducing largely because the company is looking at offline channels of growth as well. Their current reach is 120,000 stores. The universe is over 8 million stores. So any growth offline and how it meets competition from traditional players there is something that the street will keep a keen eye on as well. And that brings us to the fourth thing. If these three things work out well, then, the company is offered at around 4.5 times 1 year forward sales, 72 times 1 year forward EBITDA, and 1 year forward 90 times price to earnings. if there is an outperformance on any of the further aforementioned three parameters, then the chances are that the valuations would look a little more comfortable than these huge numbers that you're seeing on top of your screen. In fact, the proof of the pudding will be just in the next couple of weeks, where the company will report their second quarter numbers, and whether they will be better than the first quarter or not is something we'll have to watch out for. Let's listen in to what Varun Alag had to say to CNBC-TV18.
Even in FY23, there is an exceptional item because of which you're seeing the loss. Otherwise, we were EBITDA positive, although it was only 1.5%. At this point of time, we are not looking at divesting anything, but in future, we don't know how we look at things. And we are in this for decades. We want to build this company and brands for decades. We are at least not seeing any headwinds as we speak. And we are growing very strongly, and we see a lot of opportunity.
All right, no headwinds for growth right now. See a lot of opportunity. Let's talk about the insurance space now. Insurance companies have released the data for the month of October. Life insurance premium has risen 8% in October on a year-on-year basis. Private life insurance premium has increased 24% for the same month. Yash joins in with the details. Yash.
Well, Mangalam, you rightly pointed out, life insurance industry growing its premium in the month of October by about 8%. First 7 months of FY24, the growth stands at 10%. But that just provides half of the picture, because the private life insurance companies have performed extremely well in the month of October. The October premium for private life insurance companies, that has grown at 24%. First 7 months, that growth stands tall at about 15%. October retail APE or annualized premium equivalent, that also stands at a 20% growth. The weak point for the industry has been LIC. We'll come to those numbers. But before that, the strongest set in the month of October was provided by Max Life Insurance and SBI Life Insurance. For Max Life Insurance, the October premium, that grew at 36%. For the first 7 months, growth stands at 28%. And October retail APE saw a growth of 38%. SBI Life, similar numbers, October premium growing at 40%. First 7 months, the growth stands at 26%. October retail AP growing at 16%. Good set of numbers came from HDFC Life and ICICI Prudential. October premium for HDFC Life, that grew at 12%. Retail AP growth of 17%. For ICICI Prudential, after the first 6 months being subdued, October was a good month. October premium growing at 10%. Retail AP at 21% growth. The weak point this time around, similarly like the last few months, has been LIC. October premium, that declined by 2%. October retail AP was up by a mediocre 2%.
All right, Yash, but general insurance, how did that data look?
General insurance numbers, industry numbers looked good. So the October premium for the industry, that grew at 14% on a year-on-year basis. First 7 months, the growth also stood at about 15%. Standalone health insurance companies, they performed even better as compared to the aggregate industry. Standalone health insurance industry grew at 29% in the month of October and 26% for the first 7 months. These numbers were largely driven by the unlisted large players like HDFC Ergo, Bajaj Allianz and SBI General. Speaking about the two listed players, ICICI Lombard, which has a good run so far in the first 6 months, that growth slowed down in the month of October, so growing just at about 5% in the month of October. First 7 months, because of the good run rate so far, the premium growth stood at 16% for ICICI Lombard. New India Assurance, the performance is completely opposite of ICICI Lombard. Weak performance so far in the financial year, but October turned out to be a good month. Here for New India Assurance, a premium growth of 15% in October. So far in 7 months, the premium growth of 9%. Finally, Star Health Insurance, that continued its underperformance to the industry. October premium growing at 18%. First 7 months, the premium growing at 18% again.
All right, Yash, thanks a lot for that. So that's about the insurance data from both the life and the general insurance side. With that, we'll take a short break, come back, and we'll talk about all the other headlines. Welcome back. Let's talk about the fourth headline of the day. A whole host of pharmaceutical companies, they gained on the back of their strong second quarter numbers. We had Zydus Life. Let's start with that. Margins came in better than street expectations. Alchem Labs net profit too jumped a whopping 87% year-on-year. Alembic Pharma too was higher as the revenue of the company jumped by 8%. Ekta joins us with the earnings report card of the pharmaceutical stocks. All of them were up between 1 to 5% today. Ekta.
Well,
Well, yes, a bunch of pharmaceutical numbers today. I'll start with Zydus Life, which came out with its numbers during market hours. The revenue was up around 9%. The margins came in better than expectations at 26% versus 20.35% on a year-on-year basis. And the profit too was marginally better than expectations. However, in terms of the internals, the US markets, which is around 44% of their sales, missed estimates. So it came in at around $225 million. The street was anticipating $240 to $250 million. India, which is around 32% of their sales, was up around 5.5% on a year-on-year basis. So it did slow down versus what the street was anticipating. Alchem. This set of numbers, along with Alembic, also came out during market hours. So Alchem's revenue was up around 12% year-on-year. That was better than expectations. The EBITDA also better than expectations. In fact, the margin expansion stood out for Alchem, which came in at 21.7% versus 14.7% year-on-year, versus estimates of 16% and versus 13% in the previous quarter. The profit was boosted on account of that and came in at around 620 odd crores. Alembic revenue at around 1595 odd crores was up around 8 odd %, was better than estimates. The margins, however, were flattish on a Q-on-Q basis. So 13% compares to around 15.8% and lower than what the street was anticipating at around 16 odd %. India slowed to a growth of around 5% for the quarter. The US was up in single digits as well, up around 6 odd % on a year-on-year basis.
All right, Ekta, but we're not done with Pharma yet. Gland Pharma was the other one that soared nearly 5%. Bullish notes coming in from brokerages, eh?
Well, a lot of bullish notes on Gland Pharma post its numbers, which came out post markets yesterday. So, for example, Elara, which has an accumulate, raised its target price to 1,764 rupees. FY24, FY26 EPS is raised by around 1 to 4%. Bernstein outperformed target price of 1,724. According to them, sequential improvement came through as promised. The base business is stable with upside from new launches. Nomura upgraded the stock to neutral, target price of 1570. Q2 was ahead of estimates. They've raised their valuations on cyclical upturns. Goldman Sachs buy target price of 1750. Reported Q2 was above estimates. And lastly, Motilal Oswal has a buy with a target price of 1920 on the stock, saying that they are slowly getting back on track. The base business was on track with superior performance.
Speaking about superior performance, Ekta, Trent was the other one that rallied over 9% on reporting revenue growth of almost 58%, 3,000 crore rupees in terms of revenue in the second quarter. And that actually reflected across the board as well. If you just take a look at, the way the company reported their numbers, the Zudio format of the company has been doing extremely well. Revenues jumped from 1952 odd crores to close to 3,000 odd crores. So that's a near 50% jump in their revenues, and as a result of which the EBITDA of the company jumped from 255 crores all the way up to 456 crores, near doubling of the EBITDA out there also, as well, almost an 80% growth. The margins as a result of which improved by 200 basis points, and the net profit surged from 79 crores to 228 crores. Of course, there was an element of consolidated business. So as a result of which the bottom line on a consolidated basis, the jump was a lot more than if you compare to standalone. What the company said is that there was strong like-for-like growth in their overall fashion vertical, which was a 10% growth that they've reported. And it's the Zudio value fashion format that has done extremely well for them. So remember a couple of years ago, they were just adding Zudio, and now the overall strength of Zudio is close to 411 stores, which compares with Westside stores of just a little over 220. And at the same time, the company has revenues coming in from Star Bazaar as well, which is a very small portion for them, and the joint venture that they have with Zara. It's the Zudio format, the value fashion format, that does well. Irrespective of the valuations, if the company continues to report numbers like this, the street will continue to reward Trent, and that has been the one big takeaway, along with the other one, which is for you to expand your presence in Bharat, you have to offer value fashion, and that's what Zudio has done. But let's shift focus now to the commodity market. In the fifth headline, global sugar prices, they've risen 37% this year, hitting a 12-year high. However, Indian sugar prices remained under pressure. They've only risen 4% this year. Why is this, and what happens from here on? Manisha Gupta joins in with the details. Manisha.
Well, sugar as a space continues to be sweet. In the global markets, we've seen prices hit a new 12-year highs above 28 cents a pound. In the Indian markets, though, the gain for this year has only been limited to 4 to 5%. And we have been told that if the Indian markets are trading at $450 a ton, the neighboring countries are trading as high as $900 to $1,000 a ton. So the going has been quite good for the Indian markets here. Also, one, there is enough availability. Two, India is not exporting. Three, the crushing season has begun, and mostly 80% of the sugar mills will start crushing in the next week itself. So that means there is enough availability, and the government also has been releasing tranches in sense of sugar quota, ensuring that there is availability and affordability of sugar into the country there. The other important thing is that in the international markets, because India is not exporting this time around, and also the crop in Brazil and Thailand is not so great, we are looking at prices in the global markets continue to surge. There is an expectation that for the year 2023-24, there could be a deficit of around 2.1 million tons in the global markets. And this is going to be a sixth straight year that you are looking at either a very low surplus or a high deficit, which has been keeping the sugar prices in flavor.
All right, Manisha, thanks a lot. With that, on that sweet note, we'll wrap up on this edition of Markets Today. You stay tuned to CNBC TV18. Thank you for watching. Stay tuned for more news and updates.